China has been facing economic challenges, with President Xi Jinping acknowledging businesses' struggles. Official data, such as the discontinued youth unemployment rate and sentiment surveys, add complexity to understanding the situation. In this economic landscape, NIO stock is an intriguing investment opportunity backed by impressive turnarounds, strategic partnerships, and positive delivery data. But how can these factors navigate the complexities of the market?
I would say that, unfortunately, if you look at the official data, such as the youth unemployment rate, it has been discontinued. If you look at some of the confidence measures, such as the PBOC quarterly survey, they've also stopped publishing the sentiment surveys on the households recently. So I think it is actually quite hard to gauge what's going on, especially regarding the household sector. But I mean, if you look at the broader economic situation, look at the industrial production, fixed asset investments, retail sales, I think it is quite clear that growth has started to rebound in the third quarter compared to the second quarter. And we are seeing that the industrial side of things are doing better.
Looking back at 2020, NIO faced considerable challenges, with financial and operational metrics displaying a less than ideal picture. However, the company has undergone a remarkable turnaround since then. In early 2020, when uncertainties loomed, NIO's financial health and operational efficiency were concerning. Fast forward to the present, the company's journey reflects significant improvements. One pivotal moment in NIO's transformation was the substantial capital injection it received from CYVN Investments, amounting to $2.2 billion. This financial boost addressed immediate concerns and positioned NIO for future growth and innovation. The capital injection acted as a catalyst, allowing NIO to strengthen its financial standing and make strategic moves. Adding to the positive narrative is the unveiling of NIO's game-changing innovation, the ET9 sedan. This cutting-edge electric vehicle represents a leap forward in technology and design. The ET9's features, highlighted during recent events, emphasize NIO's commitment to pushing the boundaries of electric mobility. With promises of innovative technology and a slated debut by 2025's first quarter, the ET9 holds the potential to reshape NIO's future in the electric vehicle market. But what do these financial maneuvers mean for NIO's trajectory? Let's take a closer look at the $2.2 billion capital injection from Abu Dhabi-based CYVN Investments. This significant influx of funds served as a financial lifeline for NIO and positioned the company for strategic initiatives and innovation. It acted as a catalyst, enabling NIO to strengthen its financial foundation, facilitating R&D investments, and potentially driving further advancements in the electric vehicle sector. Shifting focus to NIO's partnership with state-owned Chang'an Automobile, the emphasis on battery swapping technology is a notable strategic move. Battery swapping addresses one of the key concerns in the electric vehicle industry: charging times. The collaboration aims to enhance NIO's profitability by reducing costs amid increasing competition. The goal to double the number of battery swapping stations in China aligns with NIO's commitment to providing convenient and efficient solutions for its users. This move caters to consumer needs and positions NIO competitively in the rapidly evolving electric vehicle market. Taking the pulse of analyst sentiments, Morgan Stanley's optimistic price target of $18.70 adds weight to the positive outlook on NIO. This signifies confidence in NIO's potential for growth and profitability. Analysts acknowledge the positive catalysts, including the capital injection and strategic partnerships, as pivotal factors in NIO's upward trajectory. Now, have you seen the remarkable growth in NIO's vehicle deliveries despite the economic challenges in China? In full year 2023, NIO experienced a substantial year-over-year increase in EV deliveries, marking a remarkable 30.7% growth. This positive momentum extended to December 2023, when NIO reported a 13.9% year-over-year rise in EV deliveries. These figures reflect NIO's ability to navigate economic headwinds and position the company as a key player in the evolving electric vehicle market. Breaking down the key delivery data provides a clearer picture of NIO's performance. In the 3 months ending December 2023, NIO's vehicle deliveries surged by an impressive 25% compared to the same period in the previous year. This consistent growth trajectory showcases the demand and trust in NIO's electric vehicles, even amidst broader economic challenges. Now, let's consider the potential impact of this delivery data on NIO's stock performance. The positive delivery numbers act as a strong indicator of NIO's market position and consumer appeal. Investors often perceive robust delivery growth as a sign of a company's health and potential for future profitability. Meanwhile, NIO's battery swapping strategy takes center stage with strategic partnerships involving Wenergy Group, Anhui Transportation Holding Group, JAC Group, and Chery Automobile. This collaborative effort aims to build a shared energy storage, charging, and battery swap system, expanding NIO's reach in the rapidly evolving electric vehicle sector. Looking at the advantages of battery swapping technology, faster charging times emerge as a key benefit. NIO's 3-minute swapping protocol contrasts starkly with conventional fast charging methods, potentially addressing one of the primary concerns in the electric vehicle industry: charging efficiency. This innovation aligns with consumer expectations for quicker and more convenient charging solutions, enhancing the appeal of NIO's electric vehicles. However, challenges accompany such strategic moves. Infrastructure investment becomes a crucial consideration in expanding battery swapping stations. While partnerships help distribute the financial burden, the scale and efficiency of this infrastructure development will play a pivotal role in the success of NIO's battery swapping strategy. The company must navigate the complexities of infrastructure deployment to ensure a seamless and widespread network. Another challenge lies in international adoption. While battery swapping addresses a critical need in the Chinese market, where charging infrastructure is rapidly evolving, its applicability on a global scale may vary. Many regions have invested significantly in traditional charging stations, and persuading international markets to embrace battery swapping requires strategic planning and adaptation to local preferences and regulations. But before we continue, we just want to thank you for watching this far. So, what can we uncover about NIO's financial health when we scrutinize its cash burn rate and consistent history of losses? Like many players in the growth phase, NIO has grappled with negative cash flow as it heavily invests in research, development, and expansion. With R&D costs accounting for over 20% of sales, NIO finds a market share of less than 2%, amplifying the risks associated with its financial health. Examining the risks tied to NIO stock, there's a laundry list that investors need to consider. Intense competition in the electric vehicle market is a formidable challenge. The sector is brimming with contenders, and NIO faces the task of standing out amid the crowd. Supply chain disruptions, a perpetual concern in the automotive industry, could impact NIO's production and delivery timelines. Additionally, NIO's reliance on the Chinese market exposes it to regulatory changes and regional economic fluctuations. The lack of new model introductions is another red flag raised by analysts, and this is a potential stumbling block for NIO. With other companies consistently innovating and launching new models, NIO's comparative lack of fresh offerings may hinder its performance in a market that thrives on innovation. Analysts are wary of the potential impact on growth momentum, citing fewer new product launches than competitors. Furthermore, there have been diverse analyst opinions on NIO's stock, ranging from downgrades to hold to initiation of coverage with a hold rating. These varied perspectives reflect the nuanced market sentiment surrounding NIO, especially considering the recent dip in its stock price. The price-to-sales multiple of 0.31 further underscores the current challenges faced by the company. Delving into investor sentiment, the short interest in NIO remains elevated at 15.38% of its float. This indicates many investors are betting against the stock, adding another layer to the complex dynamics surrounding NIO. Additionally, the options flow data reveals a substantial volume of sold calls, suggesting a cautious stance among traders. NIO's recent plans to cut staff positions add an interesting dimension to its strategy. While staff reductions may signify a move towards cost-cutting, the potential positive impact on reducing costs and enhancing efficiency needs careful consideration. NIO's partnerships align with initiatives to bolster profitability, particularly with state-owned Chang'an Automobile and its focus on battery swapping technology. Analyzing NIO's potential EBIT break-even becomes crucial in this context. The reduction in SG&A and R&D expenditures following staff cuts could expedite the timeline to achieve EBIT break-even. This, combined with the strategic investments from Abu Dhabi-based CYVN Holdings, presents a more optimistic outlook for NIO's financial health. So, the decision to buy, hold, or sell NIO stock is nuanced. While varying analyst opinions and the recent dip in stock price raise concerns, the potential positive impacts of cost-cutting measures and strategic initiatives must be considered. Investors are urged to weigh the presented information carefully and ponder whether NIO's current state aligns with their risk tolerance and investment objectives. So, what are your thoughts on NIO's future in this dynamic landscape? Drop your thoughts in the comment section down below. And make sure to hit that like and subscribe button to stay updated on the latest from NIO and other valuable investment tips. Moreover, if you want to know more about NIO stock, simply tap on this video link. Appreciate you joining us, and keep an eye out for more thrilling content coming your way.